welcome to another episode of Coffee Convos with Carmen. Today I have the lender, Lawrence, to talk to us about what's the difference between pre-approval and pre-qualification. So when does the buyer get a pre-approval and when? Hi, Lawrence.
Hi, how are you? My name is Lawrence Matthias. I am a mortgage broker with Golden Rock Mortgage, and glad to be here with you.
Thank you.
The difference between a pre-qualification and pre-approval is that pre-qualification is basically the lender reviewed the documents that the borrower had given and basically give an estimate of how much the borrower qualifies for. Whereas a loan approval, the lender looks at the financial information and verifies credit as well. And
so the approval is a more in-depth step, let's put it this way.
It's in-depth, and it's likely to be, it stands out in a competitive market.
Okay,
yes.
got you. Yeah, so that's the thing. In a competitive market, the buyer has to go in seeing properties with a pre-approval. So
Absolutely.
The agent, the listing agent, the seller knows that they are already approved. It's not like they just talked over the phone with the lender. They actually submitted all the documents and stuff.
Yes, submitted documents, checked the credit
and everything.
Yeah, it's more in depth. Yeah.
Okay.
Yeah. Mm-hmm.
And then there is another one for investors. Is there a program, or even for home buyers, is there a no income program out there?
Yeah, for investors, we have programs called DSCR, or debt service coverage ratio. It's a program where we say, where we say, we're buying this property and it's going to be rented out. The payment that it's going to produce from that rental is going to cover the mortgage. So we don't ask for any income documentation from the borrower at this point.
Oh, yeah. Excellent. So they don't have to come up with any income. They just have to come up with the down payment, and then you qualify them against the property that they are buying to investment property, correct?
Absolutely. Okay. Down payment, a decent credit, and that's all we need.
Excellent.
It's an easy kind of loan.
Exactly. Yeah. Okay. Thank you so much. Anything else you want to add to that? Any advice to buyers out there?
The market is very competitive, as you guys know. So you need to make sure that you go to a person that has a variety of programs where you fit in, and they will get your loan closed.
And that's the thing. Just make sure when you're looking for lenders, you look for a lender that will, close the loan, that will deliver results. Because I know any market, we always have lenders and we always have advertisements. So we want to just make sure that you talk to somebody that have closed and was referred to you, or, you do your homework looking for the lenders, not only looking at the rates.
Absolutely. Borrowers don't know the difference between lenders. And I'll tell you this, there's direct lenders that only have their loans, that you can only offer their loans and whatever programs they have, versus brokers where they're searching multiple lenders. And in what I do is basically I'm a broker, so we have multiple lenders that we can not only compete on the interest rate, but also on the programs and what they can offer.
And that's definitely. And that's the beauty of having a broker.
Yes.
So he gets you more than one option.
Absolutely.
Okay. Thank you again, Lawrence.
My pleasure.
If you have any questions, please put it in your comment and we'll get back to you.